What's good, traders? Welcome back to a brand new video on the FX trading. So guys, I'm back with another strategy. This is a very simple strategy, very easy to master. Price action, we're going to be using price action and some little bit of smart money concepts. But guys, all I want you to stay attentive, guys. This is something that you can learn in just a few minutes. Go back text it. Make sure to grasp the concept. So if you're new around here, make sure to subscribe to this channel, turn on the notification bell so that you never miss out whenever I post a video. So traders, today again I'm back with another video just on how to grow small accounts. Most of you have small accounts, but you tend to be scalping in the market. But today this strategy is all about swing trading. It's all about looking for big moves, how you can grab 100 pips from the forex market. So as you can see, guys, what we have here, this is a downtrend market. As you can see, this is a downtrend market, as you can see. So whenever I'm scrolling like this, guys, you will see that we have impulsive moves to either to the upper side like this, and then we have consolidation. You see, wherever I scroll, we have impulsive moves. What is an impulsive move? So I'll show you. I'll give you an example right here. Let's come here, right here. So as you can see, this from here to here, this is an impulsive move. Then from here to here, this is a retracement, as you can see, traders. So most of the times, one of the easiest things that helped me like really grasp on how to trade like very easy and be able to grow small accounts is looking out for impulsive move. Now something like this is an impulsive move from here to here, as you can see, traders. This is an impulsive move. So let's even make this a big impulsive move. As you can see, that is an impulsive move right there, you see. So then this is a retracement, as you can see. This is a retracement, as you can see. Again, we have another impulsive move to the downside from here to here, as you can see. And then again, we have another retracement up to here. Also, this is another small impulsive move, then a retracement, as you can see in there. So one of the easiest ways, guys, to trade in the forex market, look out for impulsive moves all the time. And I'm going to show you, this is a 3-step strategy. So as you can see, we're on a big time frame, but this works on any time frame, guys. This works on any time frame, but mostly the 4-hour time frame and the 1-hour time frame, and also the daily time frame sometimes, as long as you know the bias, the trend of the market. So since we are now on a downtrend, guys, we're only looking for sales. So this is how we trade, guys, when you're only looking for sales. Now you can see right here we have another impulsive move, but I won't count this. I'm just going to count this from here to down here. So this is an impulsive move. So most of the people know that, okay, whenever we have impulsive moves in the market, we are just going to use a Fibonacci retracement, which is also right, because if I apply my Fibonacci retracement from my swing high to my swing low like this, you're going to see that price has to come back to this zone here, and I'll mark it out for you. So remember, the most important zones on the Fibonacci is the 0.6 level and the 0.5 level. As you can see, if I mark that out and then I delete my Fibonacci retracement like this, you're going to see that price has to come back to the same zone like this, because remember this was support level, price break. So this is now resistance level. So we expect now price come and retest here, but this is basic. This is quite basic, so you need to know. So what I'm going to teach you now, it will help you to give you a picture on when now to enter the market, guys, on when to now enter the market. So let me delete this. So before I even go further, most of you know about smart money concepts. Smart money concepts is basically a trading style that was created by ICT. So this strategy is very popular, and it helps you, like, it gives you like more of an edge in the market. So what you see here, we see an impulsive move, but in this impulsive move, guys, we have what we call fair value gap. Fair value gap is just inefficient price action, and most of the times whenever we have fair value gap, it has to be covered. So I'm going to give you an example. Right here we had small fair value gap. As you can see, price came back and covered, but let me look for major fair value gap so that you can see it. So this right here, this is fair value gap. Let me delete this big nice and easy. So right here, whenever we have price shooting up with big momentum like this, it always leaves that fair value gap behind, as you can see. So this came back and covered that fair value gap right there. So like even here we have fair value gap that has not been covered. So but I think in the past price came back and covered it up. So let's see, let's look for another fair value gap. Even on this candle, fair value gap, price come back and covered it. So wherever I have fair value gap, price has come back and cover it up. As you can see, even here I had fair value gap, price has come back and covered it up. So that can continue for as long as, you know, we always have fair value gap on literally everywhere in the market. But when you know how to maximize fair value gap, if you know how to maximize it, things become easy for you traders. So now here, where is our fair value gap? Our fair value gap is on this candle right here. So since we are looking for sales now, what I'm going to do, I'm going to mark out my fair value gap, and you can see. So let me mark it out for you so that you can be able to see it. So I'm going to come here and choose my rectangle, and I'm going to mark it on this candle. So this week here, the reason I'm marking it from that week, I'm going to show you in a bit. So as you can see, then I'm going to extend it just to that week here. So I'm putting it right here and right here. So this is the gap, as you can see, that has not yet been filled. If this week came up to down here, it means our gap would have been covered. So I'm marking from here to here, as you can see, traders. So let's drag this to the side. You can even see now this gives us a clear picture of what will happen in the market. So now this is our fair value gap, as you can see, guys. Now remember, our impulsive moves is from here to here, and now here we started seeing a retracement because we saw this candle. You see, we had rejection right here. So knowing that now price has to shoot back to the upper side. Now when we apply our Fibonacci retracement, now this is where I bring in my Fibonacci retracement, traders. I apply it from my swing high to swing low like this, just like this, and then drag it to the future. So now what I'm looking for my two things. So guys, look at the 0.5 level. The 0.5 level is this line right here. You can even see, and then the 0.6 level is that line right there. So meaning the 0.6 level and the 0.5 level have, that's the gap. That is the gap that has to be filled. That is the fair value gap, guys. I don't know if you understand what I'm saying. I don't know if you understand what I'm saying, but the gap between 0.6 and 0.5 is the fair value gap. Even, guys, let me delete this, and you see this gap between here and here. This is the fair value gap. But even when I apply my Fibonacci retracement, you can see the gap between 0.6 and 0.5, that is the same gap, guys. So meaning this is even more accurate. So what I'm looking for is price coming up to this same level, and I want to see a rejection at this level. Most people they really want to see price come back here, you know, but again, for us, remember, we have a gap that has to be filled. So meaning we need to see price coming back and fill the gap. And most of the times, traders, whenever we see a gap being filled, price rarely exceeds this zone here. So meaning we are going to take our trade after seeing confirmation, candlestick confirmation, and price covers up our gap there. So let's see what happens. So guys, this is what happens. So this is what happens. As you can see, guys, fair value gap has to always be filled. So remember, now the concept here, we have an impulsive move, then we have a retracement. So we just need our retracement to be, we just need to see how far the retracement can go. Most of the times, the retracement happens 50% of this move here. Most of the times, but again, here we had something else to base on. We had fair value gap. So we wanted price to fill the fair value gap, then we see a drop. Now you can even see we had rejection on this candle, so meaning someone would have taken their trade just here and then measure out that target. So here, if you're taking your trade, you come here, choose your short position, you take your trade right here, put your stop loss above where fair value gap ends, and then put your take profit down here, you know. So this is how we do it, traders. This is how we do it. You put your take profit down there, as you can see, and let price play around, guys. This is a very simple strategy. As you can see, price drops, guys, and you make sure to hold your trade until your take profit is hit. You don't jump out of a trade before your take profit is hit. As you can see, my take profit is hit, you know. So as you can see, my take profit was hit, coming out with almost 446 pips and risking only 100 pips, traders. So this is a very good strategy, guys. Again, I repeat, whenever you have an impulsive move, try to see if there's fair value gap, and if there's fair value gap, mark it out and see if price will come back and fill it. When price fills it, now look out for sales, guys. And what makes this even more good, because remember, guys, we are looking for sells on a downtrend market. So whatever I'm doing, I'm just looking out for sales, guys. This is a strategy that I've been able to use. So if you're growing a small account, guys, 400 pips time was 0. Let's say if you're using a lot size of 0.10, that is already $400. So if you're using 0.01, that means that's roughly like around $46, something like that. But if you're using a standard lot size, which is 1, meaning that is already $4,000. If you're using a 10 lot size, it means that's already that's almost $40,000, guys. $40,000. So this is a strategy I always use, guys. It's profitable. Apply it to your trading system, and you are going to be profitable, guys. Apply this. It works on all time frames. I've been just on the daily time frame. When I'm entering this market here, I use the smaller time frame. I don't enter on the big time frame, but I only enter on the smaller time frame. That's why I see proper entry, which I'll be showing you in my next videos. But today I just wanted to show you how you can find these nice trades and then take trades off them, because nothing is complicated here, guys. Nothing is complicated here. Guys, I hope you have enjoyed this video. Make sure to subscribe to this channel, turn on the notification bell so that you never miss out whenever I post a video, guys. This is very simple, traders. This is very simple. You know, most of you are scalpers, but I was on a bigger time frame so that I can show you how to swing trade, how you can wait for trades. Traders, patience is everything in this forex market. I'll see you in my next episode. Bye bye.